Hello, dear friends. Today is Wednesday, January 22. Let's look at the charts for the euro and the pound sterling and try to make some predictions. As we can see, the euro and the pound sterling spent the first half of the previous trading day under pressure. The British currency was weighed down by weak unemployment data. The UK unemployment rate rose to 4.4% for the 3 months ending in November. Average earnings in the UK, excluding bonuses, came in line with expectations. This suggests that the UK economy continues to struggle with increasingly snowballing problems. If the Bank of England is slow to cut interest rates, labour market conditions may only worsen. Eurozone statistics were also quite downbeat. The headline German ZEW Economic Sentiment Index fell sharply to 10.3 in January. Although the Eurozone ZEW Economic Sentiment Index increased to 18 points. The struggling German economy indicates that the economic situation in the region is far from encouraging. Against this backdrop, it is clear that the European currency is likely to remain weak, especially with the risk of new sanctions from the Trump administration. Tuesday's macroeconomic calendar for the second half of the day was empty, which allowed the euro and the pound sterling to gain strong upside momentum. Notably, the euro dipped during the Asian session, as it did the day before, pressured by news that Donald Trump intends to impose a 10% tariff on Chinese imports. This suggests a volatile market, subject to any announcements and statements by the new U.S. administration, especially tariff-related news, contributing to losses in risky assets and gains in the dollar. Now, let's look at today's macroeconomic calendar. It includes data on UK public sector net borrowing, the Bank of England's quarterly bulletin, and the Bundesbank's monthly report. Although these reports are unlikely to support the risky assets and have a strong impact on market sentiment, they should be considered. In addition, ECB President Christine Lagarde is scheduled to speak today, adding to the market's anticipation. Following recent comments from ECB officials suggesting the need for a 50 basis point rate cut amid concerns of the European economy following Donald Trump's inauguration, market expectations have now shifted to a modest 25 basis point cut at the upcoming ECB meeting. Here, whether Lagarde provides further clarity on the ECB's policy direction. If she adopts a dovish tone, the euro is likely to come under pressure, at least in the short term. From a technical standpoint, the 1-hour EUR/USD chart shows that the level of 1.0384 acts as support. A pullback followed by a false breakout at this mark will trigger a strong buy signal, potentially propelling the euro towards 1.0433. An important resistance level that the pair has struggled to surpass since the beginning of the year. A breakout about this level would likely reinforce bullish sentiment, extending the euro's bullish run initiated on January 13. In this scenario, the pair could rise to 1.0465, with 1.0501 emerging as a next key target. At this market, I recommend going short on the rebound to catch an intraday correction of 30-35 pips. Short positions at 1.0433 and 0465 can be considered on a false breakout, in anticipation of a decline to 0384. If the price breaks through and fixes below this level, the euro is expected to retreat to 1.0347 and possibly 0311. At this level, it would be wise to go long on a rebound, counting on a 30-35 pip move. Going long at 1.0347 and 1.0384 will only be relevant in the event of a false breakout. Speaking of the British pound, if the price breaks through and fixes below 23.22, it would dip to 22.71 and 22.31. A false breakout at these levels would present a buying opportunity. Long positions on a rebound can be considered at 1.2197, targeting an intraday correction of 35-40 pips. In a bull case scenario, a false breakout at 23.22 will generate a strong buy signal, pushing sterling higher to 23.47, 23.74, and potentially 1.2412. At these levels, traders are advised to go short on the false breakout. Short positions on the rebound are recommended at 1.2449 with a target move of 35-40 pips. Good luck to all.